What's up, y'all? This your boy Jay Wayne, you know, representing Team Take Profits. And in this video, I'm gonna show you how to calculate your risk management, your risk to reward ratios. You know, basically the pros will tell you that using risk management, 1 to 3% of your account, 5% at max, that's gonna help you from keep you from blowing your account. Okay, because it's gonna save you, it's gonna keep you trading for years to come. And you know, we all make mistakes, but I'm trying to help you to not blow your account. All right, so I'm gonna show you right after this. Roll it. All right, guys, so when you're trading and you see a setup forming, okay, you see a setup and you want to get into a trade, you want to hit buy, you want to hit sell, but that's not enough, right? You got to think this thing through. When people want to do Black Friday, you know, they don't just go in a store without doing research. They know what aisle the toy is in. They have their family in. They come an hour early. They have the son. They tell the son, you go over there to the right. Mom gonna take the back. I'm gonna take the left at the computer aisle, and we know what we getting. They got everything mapped out from start to finish. And so we have to do the same thing when we come to these charts. We have to have everything mapped out. Where our take profit possibly going to be? Where is our stop loss going to be? Where are we going to enter in at? We got to make sure we enter in at a good price point. Okay? Once you got that understanding, you want to, okay, so let's say for an example, we're looking at the chart on GBP odd. And let's get in on a horizontal line here. Okay. So we're going to make that our entry. We want to possibly get in here. So we put entry there. Because we see it wicking out up here, right? So we see, you know, exhaustion. And we see it dropping. And let's say we get in on the opening of the second candle. Okay, well, if you know that you want to possibly get in on the opening of the second candle, well, where's your stop loss going to be? Okay? Your stop loss is going to be above the high. So you put those numbers in, and that's at 1.87286, you know, and you put it up here, and so let's make that our stop loss. Okay, so boom. All right. Well, now you have to say, well, I want to take a $5 lot size. Okay. Well, first of all, maybe a $5 lot size is going to be too much risk, because look, from the entry to the stop loss, that may be too much. So how do you find that out? How much you're really risking if you want to take a $5 lot size? Remember, only 1 to 3% of your account. So you use the measuring tool, or you hit shift and click, and you go back. How many pips is that? 81.4. This is the 2-hour chart, so the risk is going to be a little bit bigger, so you have to take a smaller lot size. Okay, so let's say you want to risk $5 a pip. Okay, so 5 times 81, if you do lose, that's $405. So you have to ask yourself, am I willing to lose $405? So if you say you don't want to risk $405, then maybe you need to do 50 cents per pip. And in this situation, 50 cents times 81, that's $40.50. $40. So maybe you're willing to risk $40 because the stop loss, you're projecting it to go towards this area here. All right, towards this structure here. All right, so what is your risk to reward ratio? So you just pull out the same thing here, and your risk and your reward is 117 pips. So 50 cents times 117 is $58. So you're risking 40 to make $58.50. Okay, so that's pretty good. That's like almost like a 1 to 2. A little bit bigger than 1-to-1 risk to reward. So that's good. So you could take that if it's a clean setup, okay? So that's how you calculate your risk to your reward. If your risk is 81 pips, but you're only looking to make, this much here, then you need to think again on your setup. Maybe you need to pass the setup. If you're only looking to take profit at 37 pips, but you're risking 81, you need to hold off on that, and you need to think about finding another trade setup. Or maybe you need to think about, getting into the trades a little earlier. Figure out a strategy that'll help you get into these trades a little earlier. And I have videos that will help you get into these trades a lot earlier. So just make sure you look and go through my videos and see, Jay Wayne strategies. Okay? But this is basically how you do it. Now, another thing is you can use this if you want to know what's the percentage, like 1 to 1, 1 to 2. Pull out this tool here. It's called, for this one, it's a short position. So short, and you want to put it right here on your entry point, and you want to put the red right on the stop loss and the green on the take profit. So if you took this position here, it'd be 1 to 1.5, which is good. So and also I'm gonna be doing a video for you guys that's gonna show you how to go in with a 10-cent lot size, and as it continues to push towards in your direction and it start breaking levels on the smaller time frame, you can take out, a bigger lot size and be safe and still compound your account. So that's how I grew my account, and I want to share that with you guys a little bit later. But I want to get this video for you so you can understand how to calculate your risk to reward. That's for a sell. Same thing for a buy. So let's switch it around. So let's say you want to catch this buy. You see it breaking out of this little consolidation period right here. Let's say we want to enter right here on this candle. Okay? Stop loss is below the low, right down here. Take profit, you projecting it to go maybe up here. Right where you saw it wick out up here, you projecting it to go there. Okay. So same thing. Stop loss, how many pips? So that's 90, that's pretty much 100 pips from when you entered. So you got to ask yourself, okay, what lot size you want to take? That makes sense for your account, 1 to 3%. Okay? So is it 50 cents? Is it $1? Are you willing to risk $100? Whatever. So, for an example, if you want to do 20 cents times 100, you understand that's $20. But what is your reward? Well, your reward is 89 or 90 pips. 90 pips. So maybe you don't want to take this trade, or if you're really in love with it and you really think it's going to go, your reward is 89 pips. Okay? And as it go in your favor, maybe you could take out another position to compound your account. And for this situation, the last one was short. This one is long. Okay? We call, when it goes up, green candles, we call that a long. So you want to put the red down here, the green here, and you see it's not even a 1. It's almost a 1 to 1. It's almost. So maybe you might want to put your stop loss tighter, I guess, maybe, to make it a 1 to 1. But here's the thing, guys. You don't want to force your stop loss. You don't want to put it where you see fit. You want to put it where market tells you to put it, okay? And most likely we put it below the low, okay? Because it could come down and wick out around that area and stop you out, so, and then go up. So you want to put it where market structure tells you to put the stop loss, and then you put the stop loss, then you put your lot size according to the risk to reward ratio. So guys, comment below if you have any further questions. Comment below, if you need help understanding this. And also, I wanted to tell you, you can right click on this short position or this long position and go to the settings tab, and you see how I have percent. You can do cash, you can do percent, you can do compact. I like compact, but if you don't do compact, it tells you a lot of more information, but I don't really care for all that other information. I just use compact, and it just tells me everything's simple and easy. All those different numbers, I just keep it clean. Okay, so that's how you can use that, guys. Customize it how you like. But risk to reward is very important. Don't just enter into these positions without knowing the whole story, without knowing where it's going to go, without knowing what you're risking on this trade. Okay. All right, guys. So the last thing I wanted to show you was I've put together a forex risk calculator example. So let's say you have $300 in your account. You can substitute this formula, whatever you have in your account, but the $300 is what you have in capital times 3%. Now, if you only want to use 1%, then change that number to 1. Okay, so 300 times 3% equals $9. Okay, $9 divided by what is your stop loss? Remember, I showed you how to calculate the pips on the stop loss. If that stop loss is 80 pips, then 9 divided by 80, and it will give you a number, and that number is going to be your lot size. So in this situation, $9, 300 times 3% equals $9. $9 divided by your stop loss pips, which is 25 pips in this example, equals 0.36, so 36 cents. So in Forex, we don't do 36 cents. We do 10 cent, 20 cent, 30 cent most of the time. So we do a 30-cent lot size. All right, so $9 risk per trade. In this situation, the lot size was 30 cents per pip with the 25 pip stop loss. So use this, guys. If you so use this if hold on. So feel free to hold on. So guys, feel free to use this and just supplement it or just change the numbers around according to how you're trading, according to your lot size, according to your stop loss and your capital. Okay? So I hope this video was informative. Email me, comment below. Follow me on Facebook, like my Instagram, whatever you need to do to get a hold to me. I'm here to help you guys, all right? So, hey, don't forget to like this video, comment, and subscribe, guys. And let's make this money, baby. Peace.